Okay, traders, so in this video, we are going to talk about deep pullbacks. Now, when I say deep pullbacks, a lot of times it doesn't mean that the market is just pulling back real deep. It could just mean that, we're just having a deep pullback into the swing. So let me show you an example right now. So let's say the market is going up, and let's say this is the 5-minute chart, and we pulling back right here, and then we make a new high, and let's say it pulls back deep into the swing. Okay, this is swing right here, and let's say that it pulls back deep into that last candle. Okay, and this is what I mean right here, guys. A deep pullback, meaning that it's going really deep into the swing, touching that last candle. Okay, and a lot of times you will see it bounce off that last candle and go back up. Now, when it comes to supply and demand, okay, a lot of times it don't come to that last candle. That's why sometimes when I draw my zone, I draw, the other candles that's around that zone. So I'm gonna show you some examples, but that's what I'm talking about when I say deep pullback. It's going to that last candle. Okay, so another deep pullback or another example of a deep pullback is using a higher time frame. So let's say that we're looking at the 1 hour. Okay, that's considered a deep pullback because on the 5-minute chart, okay, it looks like a trend. So let's say that we're going down right here. Okay, and we pull back, going down, and let's say we pull back, right? And let's say we are at a key level right here, and this is the, let's say this is the 1 hour chart, right? And we come to that key level right here. Now let's say we go to that 5-minute chart. This is the 1 hour chart. Now let's say we go down to the 5-minute chart. If you go down to the 5-minute chart, this definitely gonna look like a uptrend, right? But we all know that this is a key level on a 1 hour chart, and there's a possibility that this is probably going to be a reversal, right? So this would be a deep pullback, right? Because on a 5-minute chart, this is like an uptrend. So when it comes to this key level right here, if we find or we see a nice little reversal pattern right here, we're looking to go short for that nice little risk to reward. So these are the deep pullbacks, what I'm talking about right here, guys. We're looking for these deep pullbacks on a 1 hour, or you can look for it on whatever chart you're trading, like the 5-minute, and so on. So let's go to some examples right quick. So here's an example right here. We have the market at support, bouncing up, and it pulls deep into demand, right? Something I call deep demand or deep supply. When it goes really deep into that demand and going to that last candle, because a lot of times when it comes to supply and demand, let's say that we have a level. Okay, let's say this is we're going up, and then we have demand, and then we have, sometimes the market just don't shoot up like that. Sometimes it goes up like this and then comes back down. So a lot of times you would see me draw a zone, okay, and I will cover most of the candles that's around that zone, okay, because a lot of times the market will just come at the top and bounce back off. But right now what I'm talking about is I'm looking for the market to go really deep, real deep to that last candle that created the whole move, okay, and for that up move. Now, the reason why I'm showing you guys this is because you can actually get some decent risk to reward, using this this type of way to get in the market. You don't have to use this way. This is just another option, or another way I'm showing you guys, or another way to think about the market when you are trading it. Okay, so the way I do it sometimes is, let's say that we have the meat of the move right here. Me personally, sometimes I just get in the meat of the move, right? And if it pulls back deeper, maybe I will add some more, maybe to that last candle, but it wouldn't be the full position. Just add some more, whatever cases. That's how I would play it, because if you try to always go for that last candle, you will notice that the market will never come back to that last candle. Okay, it will just go to a high or whatever the case is, and then bounce back up. So just keep that in mind. Sometimes the market will probably never come to this level, but I'm just showing you guys more options and more ways to think about when you're trading the market. Wow, this could be a deep pullback, or you could just be a deep pullback trader. Okay, some people are, some people do that. Some people just wait for deep pullbacks, and they are okay with missing out on some trades. Okay, so if you want to be a deep pullback trader, knowing that, okay, you're waiting for that last candle, okay, and you're risking this small right here to get a nice reward, you can do that. Okay, so you can only trade deep pullbacks if you want to, or you can only trade reversals. Some people only trade reversals, or 90% of their trades are reversals. Okay, and 10% will probably be with the trend, whatever the case is. But it's up to you if you want to do that. Me personally, I like to do both. Nowadays, I'm doing a lot of reversals, especially in the morning time if I see it. But at the end of the day, whatever makes money, whatever makes sense to you, you can do that as a trader. Now, some smart money traders, what they do is they will take the last red candle. So let's say this is an up move. What is an up move? They would take the last red candle before the up move, right? Me personally, I don't like doing that. I will do it not all the time if it makes sense. So the way I look at it, when I'm using supply and demand, guys, I like to take the last candle that made the move. So notice how this candle right here is the lowest candle before we made that move up. That's the candle I like to take because that's to me is the most important candle. That's the candle that pretty much at the lowest point made this move, right? So I will only take the red candle if it makes sense, okay? And when I say if it makes sense, let's say that the red candle was a little bit higher than this green candle. I would say, you know what, let me get in just in case the market doesn't come all the way back down to this candle. I get in at that red candle because I want to get in the move. That's when I'll say I would get in. But if the red, a lot of times we notice, and this is why I don't really use the red candle as a way to get in, is because sometimes you would notice that the last red candle would be really, really big. Okay, and you have that last green candle that pretty much made a move. So that's why sometimes I don't even look at the last red down candle if the market is going up, or vice versa, the last up candle if the market is going down, because sometimes this big candle or this last down candle could be so big, I'm not going to use that as a area to get in. So that's why when it comes to trading, guys, you have to be very open-minded. Most smart money traders are following this one guy, and they just basically using the same. Everybody using the same strategy when it comes to those type of traders. Me personally, I don't trade the way they trade because I know that most of the guys are close-minded. So they think everything is just one way, and honestly, the market is not like that. Okay, so when it comes back to this last candle right here, I'm looking to get in, and ride the market. So let's show you guys another example. Okay, so here's another example right here, right? Now, it doesn't have to be a demand level. It could just be a regular swing high or swing low. So what we have here is we have the market basically bouncing off. We have these lines are 60-minute support levels. Okay, we definitely have a straight line move right here. And we all know these moves right here are what, right? Gaps. So it's a strong possibility that the market will close this gap right here. So what we have here, guys, is the market bouncing. Now, the way I'm looking at this is I don't like this bounce right here because we bounced a little bit, okay, and then got a little choppy here, and then we bounced up, one more time. So this is okay. It's not that bad, but it's okay. Me personally, I probably wouldn't do anything right here, okay. Now, when it pulled back right here, and you could tell when it was pulling back, it was looking like a correction. When it broke out of this correction, and we're still at support, this is one of the areas I can probably get in, okay? Or I can say, you know what, I'm going to wait and see how it breaks out of this move. Now, it broke out pretty good because we made a new high right here, okay? Now, it came back to the breakout move. So let me erase all this stuff. So notice how we have this, okay? So this is a swing right here, and it came back up. So where is the last candle before the up move, okay? It's actually this red candle right here, right? Because the red candle is actually the lowest candle before we had that big up move. That's how I would look at it, okay? Now, I want to show you guys something. Let's say that this green candle right here, imagine this green candle didn't have this wick. So notice how we have this green candle, and notice how if this green candle didn't have that wick, it would be slightly above this red candle right here. Me personally, I'll probably get in at this green candle because sometimes you would see it hit this green candle right here. It won't even go to this candle right here. But I'm just giving you an example of what I would do. You don't have to do that, okay? Anyway, it came back to this last candle right here, okay? This is the last swing right here. Notice how it came right back to it, and then voila. So this is an example of a deep pullback when it comes to, the market. You can only wait for deep pullbacks if you want to, but you have to be okay with missing the move. So you have to say, listen, I'm gonna look at multiple markets, and I'm gonna wait for whatever market that comes to that deep pullback. I'm gonna take it, and you can just trade like that if you want to. Okay, I'm just showing you guys ways to basically have that small risk and that big reward. All right, so let's go to another example. Okay, guys, so here is another example, and excuse all these lines right here. That's just me drawing on my chart. Okay, now we have a major, and notice how it says major swing high right here. So this line right here is a 60-minute major swing high. So it hits this line right here. The market pulls back, giving you this nice little supply area right here. Okay, and notice how it pulled back to this last candle. So let me show you that real quick. So again, if you want to be a deep pullback trader, you wait for it to go back to the last candle. So this last candle right here is the last candle that pretty much made this move to the downside. Okay, now this is a green candle, but some of these candles right here are not green. Some of them are red. So don't be a trader that only thinks, oh, I'm only going to trade if it's a green candle. Okay, I don't want you guys to be that type of trader, because a lot of times this green candle is not green, it's red. Okay, and it's the last candle. All right, so anyway, it came back to this green candle right here. Okay, the last candle, and then it shot down. So again, waiting for that deep pullback to this level right here, and waiting for that reaction. We had a nice trend line break too, so this was a good setup right here. Okay, so let's go to another example. Okay, guys, so here's another example right here. We have this breakout right here. The market's breaking down. We pull back to this swing high right here, and this is the last candle right here. Okay, again, we pull back to the last candle right here, and I like this one here. Now, again, some smart money traders would say this is the candle I want right here, the last up candle. Again, if you want to trade like that, it's up to you. I don't really care about that. I want the last candle, because the last candle is actually the most important candle, okay, that created this whole move. Okay, now if you feel like, all right, I want this candle, go ahead, get in. The only way I would take this candle right here, if this candle stopped maybe right here. So notice how this candle, this low, is so far away from the last candle. So if the low was around here, I would take this green candle, because sometimes it would hit this green candle right here and come back down. But notice how it doesn't really care about this green candle. It goes straight to this candle right here, real deep into that candle. Let me erase that. Notice how it goes really, really deep into the last candle. Okay, bypassing. Notice how it bypassed the last up candle. You see how it bypassed that? It went above that last green candle. To me, the most important candles are the ones that's creating the last swing. Okay, comes back to this one, and then we're going back down. Okay, so guys, those are the examples. And before we actually finish this video, I'm going to show you how you can actually use the fibs on reversal. So let's go. So guys, a lot of times when you are in that reversal state, you can use your fibs. Okay, I don't use fibs, but I know some of you guys probably use fibs. I don't use it, but the best time to use fibs is actually when the market is in a reversal state. So the market is reversing, from this nice little, support level, and whatever level you want to use. The common levels would be 618. Okay, and the next level I have is a 70, and then I have a 78.5. Then I have an 86.35. Then I had a 100%. So you can use these levels, or you can use whatever levels you want. But a lot of times you will see the market come back to either that 61.8 or all the way to that 78 level. Okay, so let me show you guys some more examples. Okay, so right here we have a 60-minute support line. Notice how we have this nice little wedge going on. It broke out and it pulled back. Okay, again, I don't use fibs because you can look at the market and basically see that this is a nice level to get in right here. It's the level where pretty much it broke out, and it's a nice demand level too. So but anyway, you can actually take this. You can take this right here. They take it to the high. Okay, and then pull back to the 61.8. Okay, so again, you can use your fibs when the market is reversing. Okay, so here's the example right here. the market came back to this 618 level right here, okay, and it came back to that 70. So me personally, I like that 618 all the way to that 785 level, okay, and you could use these fibs for that. Again, if you want to, go ahead. You can use the fibs. Me personally, I like to use structure. So if it comes back to a certain spot of the structure, you can use it right here. Notice how we have this swing right here. Let's see. Okay, this one right here came to that 60. It came to that 61.8, and also it touched that 70, 70.65. Okay, and then it went down. All right, so if you don't know how to draw the fibs, guys, it's very easy. Let's say that we are waiting for the market to go down. Okay, this is the last swing high right here. Okay, the market went up and it basically went down. So we are looking for a pullback. So we wait for the market to pull back, and notice how it's pulling back right here. We take the fib and we take it from the high, okay, all the way to the low right here, to that wick right here, and we wait for that pullback to that key area, whatever area you're looking for, 61.8 or 70 or 78, and then basically you're waiting for that and you take that trade. Now it's the same thing if the market's going up. If the market's going up, you start from the low, okay, and all the way to the top, and you wait for a price to come back. Okay, it's very simple. If the market's going up, you start from the bottom up. If the market's going down, you start from the top down. Okay, just remember that. Again, you can use fibs if you want to. Me, I like to use structure. All right, so let's go to the next video.